the exciting companies that are going up, where the exciting work is being done, i.e. at Stanford, at Berkeley. It's happening in California, and yet you have the most, the toughest tax situation in California. And so, you exit and then you just realize that you have all kinds of issues.
We have to ask on Capital Gains Tax Solutions podcast is part of why we're here. And people have these big exits, these cryptocurrency, these businesses, this real estate, the IPO, they have public or private stock. What would you say is the biggest frustration when it comes to capital gains tax deferral or solutions for people when they go to exit and they're facing, 20 to 50% of their proceeds being wiped out by tax?
I think the biggest frustration is that a lot of the opportunities, I was talking about this money flywheel, being in a venture capital, being on boards, being where other great startup founders are. That is California. To some extent, it's Austin, Texas, but that happens, if you're really going to look at where you're going to get your board seats for the exciting companies that are going up, where the exciting work is being done, i.e. at Stanford, at Berkeley. It's happening in California, and yet you have the most, the toughest tax situation in California. And so, you exit and then you just realize that you have all kinds of issues.
So what if there was a way to have flexibility on those exits, right? Where you didn't have to worry about a 1031 exchange or these short time frames, or being able to not invest back into your own deals or next venture capital deal, or be an angel investor. And it can work for any asset of any kind, as long as it has $1 million net proceeds, $1 million gain. And essentially, it can also eliminate estate tax, which is another issue too, above me on this stepped up basis. I'm curious, would boards be looking for somebody like that to help them navigate those waters and look at their options to make sure that, it's not just about cash flow and appreciation, it's about tax flow when you exit?
Well, most of those exits are going to be that the people that are dealing with the issue are going to be the individuals on the boards, not the boards themselves. And so the people that would be more interested in that would be your financial planners and your private bankers, that are trying to advise the people that have the equity, that have built that equity, and now are thinking about, how do I keep as much of the money that I've made?
Right, exactly. Yeah. To that point, right? It'd be helping them who are exiting, who are already board members, and they have those individual things. I'm curious, you probably exited some assets and some things in the past. What have been your strategies to defer capital gains tax or plans for building a capital gains tax exit plan?
Well, one of the greatest strategies that I see is starting your own venture capital fund, because then you can defer those gains using carry. So that, I think that's one of the ones that I've seen a lot, which is just creating, having a venture capital fund that other people invest in as well. But there is, an opportunity to take those gains and basically capture them as a percentage. You kind of capture them as a percentage and you carry them forward.
Okay, so let's walk through that, right?
It's called carry.
Yeah, let's walk through that. So let's imagine you had $100 million worth of Ethereum, right? And you want to exit that now, right? And it's California. So let's say you're going to pay 33%, maybe even 37% of that. So you exit the 100 million. Can it roll into this venture capital fund? Or are you saying
you needed to create the venture capital fund ahead of time?
Right. So what happens if you hadn't created ahead of time and you wanted to fund that venture? So rather than having to go to angel investors or private investors or the bank, to come in and finance your next $100 million startup, what if it could come from your previous exit and you could defer the tax and that could fund it? So it's kind of like go fund yourself versus getting funding from somebody else.
Yeah, that I don't have any expertise on.
Excellent. Thanks for sharing. We do. And so if anyone's listening to this, we have a solution for that. It's called a deferred sales trust. You can go to capitalgainstaxsolutions.com and you can start to build an exit plan. We found that most high net worth individuals know who help and they struggle with clarifying what options are available and which ones give you that flexibility to still be an entrepreneur, to exit crypto or business or primary home, GP, LP interest, carried interest, captive insurance, really any asset of any kind, public or private stock. Close to 30-year track record now, thousands and thousands of closes. Yeah, a lot of people still don't know about it. By the way, you can check out the book, Building a Capital Gains Tax Exit Plan, if you want to learn more. And maybe, just maybe, Emmy will have me on her show and we'll go out and make a huge difference for a lot of families because we're both from Taxifornia and we both have been on the front lines of tax for many, many years. Now, it's funny enough, we're both now in Florida, which is kind of cool too.